Hey, welcome back to my YouTube channel. This is your girl, the Rwandan Trader. This is the episode 4 of the backtesting series. Remember, we're already done with the backtesting series of January and Feb. If you have not watched the videos, make sure you go back to my channel and you watch those videos because they have many lessons back to it. Just go and you watch the videos. So without further ado, let's go on with the backtesting of today. We'll keep on continuing backtesting CADJPY, but today will be backtesting March. Remember, we are still on the 2023. We'll only go to another year after we are done with 2023. So let's go to the charts and we keep on backtesting CADJPY. Like all the process we went through in the other videos, we're going to do the same in these videos. The first thing that we do is going to the charts. Going to the calendar, you go to the calendar. When you go to the calendar, remember we don't trade on the first week of the month, so we will not be trading on the first week because we have NFP on that week. If you check on this calendar here, you can see here actually we have NFP on this day here. You can see we have NFP. So starting from the 1st March to 10th March, we will not be looking forward to place any trades. So any trades that we will be placing on this on these trading days will start from Monday, March 13th. But remember, we'll go in daily. Daily will be the only thing that will give us a go ahead to go in the smaller time frame, which is the M15. So let's go in daily and we see if our daily rule is actually met so that we can go in smaller time frames. Going the smaller time frame, you can see here that on the calendar it showed that the trading day started from Monday 13th, and if you go here you can see this is Monday 13th already. This candle here is Monday 13th, and for us to be able to look for any trades on Monday 13th, Friday should have closed bullish, since remember we are trading CADJPY, and CADJPY, the general trend is still bullish, so we'll only be looking for only buys on this pair and no sells. So for us to look for buys, the previous day should have closed bullish, and you can see here this day actually closed bearish, so this day is an invalid day to trade. So let's see if Tuesday 14th March, let's see if this candle will close let's see if this candle will close bullish for us to actually trade on Tuesday. So you can see here this candle actually closed bearish, so we'll not be trading on this day on Tuesday 14th March. Let's see if another day, which is 15th March, let's see if this candle actually closed bullish for us to trade on the following day. If you go on the following day, you can see this candle actually closed bullish, so it makes this day for us to be valid to trade, which is Wednesday 15th March. But before doing that, we have to go to the calendar and we see if 15th March is actually a profitable day or a valid day for us to trade. Going to the calendar, you can see that March 15th, which is on Wednesday, you can see we have PPI, and remember, if we have USD CPI and USD PPI, it means that day is invalid. We will not be looking forward to trade on that day. The only day that we can actually trade here is on March 16th. But remember, it's only valid if the daily says that it's valid or the daily checks out the other rule that daily we have on the daily. So let's go on the daily and we see if Wednesday actually closed bullish for us to look for buys on March 16th. Let's go to the daily and we see if this rule actually checks out. Going to the daily, you can see here this candle. Thursday 16th is not really a valid day because the day here on Wednesday 15th March actually closed it closed bearish, so it means we will not be trading on that day. Going to the calendar, you can see here Monday 20th is actually a valid trading day. It's a valid trading day, you can see, because we don't have any news. So this day it's actually a day that we can actually trade on. So let's go on the charts and we see if Friday 17th March actually closed bullish for us to look for buys on Monday. Monday here, you can see it's not a valid trading day because Friday closed bearish. Let's see if Tuesday will actually be bearish because we are not trading on Monday. You can see here, Monday 20th actually closed bullish. Let's see here on Tuesday 21st March if this is actually a valid trading day, but we cannot go in smaller time frames without going on the daily, and we see if actually daily proves if this is actually a trading day. Going to the calendar, you can see that Tuesday, March 21st is not a trading day because we have here CADJPY. And remember, if you have CPI of both CAD and USD, like CAD itself and also USD CPI will not be trading. And you can see also this JPY holiday here is also added to the equation, so we will be staying out on this day. The only trading day that we'll be looking forward to trade is on Thursday, March 23rd, but only if daily actually proves the idea of us trading, or if Thursday is actually a trading day basing on our daily time frame restriction. Let's go to the daily and we wait until on here, as the calendar says, it will be on Thursday, March 23rd. Let's see on the daily how the day actually closed on Wednesday, March 22nd. Going to the daily, you can see that Wednesday, 22nd March actually closed bearish. So that gives us a confirmation that we should actually stay out on Thursday, 23rd March. So what we're going to do again, we're going to go back to the calendar and actually see if on Monday, because we don't trade on Fridays, we're going to see if actually on Monday is actually a day that we can actually look for trades. And to do this, only the calendar can do so. So let's go to the calendar and we see if Monday is actually a valid day for us to trade on. So let's go. Going to the calendar, you can see that Monday 27th March is actually a profitable trading day. Not a profitable trading day, sorry, is actually a valid trading day. So we can actually look forward to go trade, but only if daily says so. The daily can say so. Remember, if Friday, March 24th actually closes bullish. So let's go to the calendar and we see if Monday, March 27th is actually a valid day, and it's only a valid day if Friday, March 24th actually closes bullish. Let's go to the daily and we actually see if daily actually says so. Going to the daily, you can see that Monday, 27th March is not a valid trading day to trade because you can see here Friday, 24th, it closed bearish. So we'll not be looking forward to trade on Monday. So let's go to the calendar and we see if Tuesday, 28th is a valid trading day because you can see that here on Monday we will not be trading. Going to the calendar, you can see that both Monday, not Monday, but both Tuesday, March 28th and Wednesday, March 29th, and even like from Monday to Friday, all these days are actually valid days to trade. So we will not be coming to the calendar again. We'll just be backtesting till Thursday, March 30th, because remember we don't trade on Fridays. So let's go to the calendar and you see how the daily candles closings were. Then we will see if we will actually look to the smaller time frames so that we can look for entry. So right now we'll go to the daily and we see if March 28th is actually a valid day for us to trade. Before we go on, if you have not subscribed yet, be sure to subscribe and make sure to like, because I can see people who watch the videos are way more than people who actually like the video. So just leave on a like so that I can keep on making this kind of video for you guys. And if you think there's someone who can actually learn from this video, don't forget to share to that person and go on go on my channel, watch the videos that are there. I assure you you actually learn more from those videos. So let's go on with the video and we see if we'll actually be trading on the 28th March. So let's go. Going to the daily, you can see here Monday 27th March actually closed bullish. So what this means is that we'll go to the 15 minutes time frame for us to be looking for our W pattern, so that you can actually enter in the trade and place the trade there. Let's go to the M15 and all will make sense when you get there. Going to the M15, like what I said on the previous episode, what you always do is that you measure the impasse move. Coming here, you can see the impasse move from down here, like the day before Tuesday. You can see here, this is a very big move. You can see here we have 147 pips. So for us to be able to place trades or to even look for the W, we will need to wait for that 40 pips retracement. So you see, you have to draw it here, the 40 pips retracement. Let me make sure it actually gets to 40 pips. So there you can see here, this is 40 pips already. So you will have to wait for this, for the market to actually get to the 40 pip retracement for us to be able to look for any entries. Let's wait and see. So there you can see that the market has already reached to a 40 pips retracement. Now we can actually wait for the W pattern. So you can see here we have up, down, and down, up, down. But you can see here it's still at 147. And remember, I only look for trades when the price has reached at 5 a.m. GMT plus 2. See here at GMT, 5 GMT, yeah. So remember, if you want to see all these steps going on, like from the first thing I look at to the last, I have made a strategy, a full video. You can actually also, like, you can go to my YouTube channel, you see this strategy, go and learn, and then after that come and see how I actually look for trades. So yeah, let's wait until it gets to 5. Okay, you can see there it's already 5, and we have a W that is being formed. We have up, down, up. So our neckline is somewhere up here. Let's see if we get a candle closure up here for us to consider a retracement back as an entry. Okay, so here you can see we have another W, down, up, down. So this can be a neckline, which will be wait for a candle closure up. Okay, here we have another potential W formation. You can see we have down, up, down. So this is actually a neckline, a neckline here. So let's see if we're going to get a candle closure up. You can see here we have another W pattern, but then this candle closed up. So you can see this is the W, which is very clear. If you cannot see it well, let me actually draw it. You can see here we have down, up, down, and up. So here you can see this is a W. Let me put it on the side so that you can see it well. This is a W, and here we have our neckline. Here we have our neckline. So remember what we always do after this. We wait for a retracement back, then an entry with a 15 pips stop loss and a 45 pips take profit. I always go for a 1 to 3 RR risk to reward ratio. So here you can see that this candle closed up, but remember, we just don't enter from nowhere. Remember the H1 rule. You go to H1 and you see, does the H1 candle, the 1 hour before the neckline retest, is it bullish? If it's bullish, that's when you can actually wait for that entry at the neckline. If it's not bullish, you wait until another bullish candle actually gets printed out so that you can enter at the neckline. So if you go here to H1, you can see here this candle here. Let's make it bigger so that we can be sure if this is, yes, you can see that this candle here, because this candle closed at 7, so the previous candle should be from 6 to 7 here, from 6 to 7, because this candle here will actually close at 8. So this candle here from 6 to 7 is bullish. So that the H1 confirmation is ticked. What we do is we go to M15 and we set in our buy position to a neckline. You take in your sell position, buy position, sorry, put it here. I've already set in a template. Yes, there, and you can see that we have a 15 stop loss and a 45 pips take profit. So let's see if we're going to get triggered in. There, we're already in the trade. So when you're already in the trade, you make sure to set in actually the 20 pips place where you'll be going break even. From here, let's see, you can see there, you'll be going to break even. And then now this trade is risk free. So it will either be take profit or break even. Let's see here. Okay. So there you can see it actually hit take profit. So you'll actually have this one trade in March. Remember, starting from 1st March to 28th, you did not get any trades. You just got this trade here on the 38th. It will take you back to, in trading, you really need patience. Without patience, you find yourself like executing necessary trades while you will not be able to take these trades that are actually of high probability that you should be taking. So you should really be careful when it comes to that. Let's go in daily and we see. But then from here, you can see that we actually took a trade on the 28th. And remember, we don't trade on like the following day. If you've made profits on Monday, on Tuesday, you'll not be trading on that day. So here on the 28th, that's when we had a trade. And remember, 29th, we will not be trading. So this day, it will be gone. The only day that we'll be looking forward to trade is on 29th. And remember, we only trade 29th if 28th closed bullish. And you can see this is very bearish, so this day is not a valid trading day. So we'll not be trading on this day. Let's see if 30th will be a trading day. We'll be waiting for this candle to close. You can see this candle actually closed bullish, so this is a valid trading day. Let's go to M15 and we see how that day actually was. Going to M15, you can see that the market has been going up, so this is way more than 45 pip impulsive move. You can see it's 182. So we'll be waiting for a 40 pip retracement back for us to be looking for any entries. Let's get this here. Be waiting for 40 pips for us to be looking for any kind of trades. Yes. So let's see if we're going to get the 40 pips retracement. So there you can see we already have, they are down, did not actually go to 40 pips. Okay, so you can see it did not go to any 40 pips retracement. Yes, but there you can see it actually went to 40 pips here, and it's around 9 a.m. And you can see the W pattern right now is being formed, and it's actually already formed. You can see here we have down, move, up, down. So we're waiting for a candle closure up. You can see this one, it's already up. So we'll be waiting for a retracement back to the neckline for us to actually buy. So after knowing that, let's remove this. You can see here, this is the neckline that I pointed out the other time. It's down here. And remember, if price goes way beyond 20 pips, we will not be looking at a retracement back, but then we'll be waiting for another W at this point here. But then here, let's see if this is actually 20 pips. If you check here, this is not 20 pips yet, so we can wait for a retracement back here for an entry. But remember, we need the 1 hour rule to be in supportive with that. So you can see here, going to H1, you can see that this candle here at 9, the previous candle, which was from 8 to 9, closed bearish. So we will not be trading on any neckline retest at 9 to 10. So we'll be waiting to only press trades after this candle closes. So we'll enter exactly in the trade from around 10 to 11. So let's go to the M15 and we see if that's how like the entry will be. So what that means is that if this candle retraces and gives us an entry before 11 to 12, will not be, not 11 to 12, let's go back to 1 hour. Yeah, from 11 to 12, because this candle closes 9 to 8, 9 to 10, sorry. So from, if the other candle actually, if it gives us the retracement before 11, we will not be looking forward to place any trades at that point. Okay, you can see there. Let's see if this is 20 pips already, so that we can know. Okay, we do not have 20 pips yet. We do not have 20 pips yet. So here we can actually place trades at this point. See, yeah, we do not have 20 pips yet. So remember, it should only be at 11. If it's not at 11, then we'll not be pressing any trades at that point. Let's see, what time is this? 10:30. Okay, so there we already have a 20 pips. So we'll be searching for another W pattern. It's not necessarily that it should, the W pattern should be down here. It can be anywhere, like it can even be up here, and you can see from here, this is a W pattern here already. From here down, you can see, let me draw it with a line so that it's visible. We have down here, we have up, down, and up. So from this, you can see that this is the neckline. We can enter at exactly this neckline retest here. Let's press the trades that are exactly there. Okay, so we can see this is at 12, but then is this from here to here? Did we have 20 pips? Let's check. Yeah, we had 20 pips already, so we're not going to have any entry at this point. So let's see if we're going to get another W pattern. Okay, so from there you can see we have another W pattern here. Let me make it visible. We have another W pattern here, up, down, up, and here we have down and up again. So this is the W pattern from exactly down, up, down, up. So here our neckline was somewhere here. I don't know if, yeah, our neckline was somewhere here. So the trade would have been down here, but then would have missed it because you can see the price already went up. So from there we'll not be having any entries at that point because we missed this entry. So we would have missed this loss here. And remember, this is the last day of this trading day, and that really marks up the last day of our trading day. So from there you can see on exactly CADJPY for March 2023, you can see here would have only one trading day. If you would have not missed this, which was a loss, you would have only one trading day, and you would end up only making 3R in the month of March, which is very fine. Remember, if you make between 1% to 3%, you are way ahead of each and every trader out there, because remember, 95 of people who are actually trading are failing. So you making 3% is actually very much better and very good. So go on, practice, go to this month of March 2023. You can even start from January. Don't take my word. Just go and backtest for yourself. Follow all the rules that I have said. If you have not understood any of the rules that I said, comment. I'll make it clear. And that is all for this video. If you've liked this kind of content that I'm putting out, be sure to like my video. If you have not subscribed yet, just subscribe. Until next time, this is your girl, the Rwandan Trader. Bye.